What up, my people? It's your boy Don Prince. I'm back to this channel again, and today I'm super excited about the outcome of our previous analysis on gold. I predicted the gold. I told you that I was bullish on gold, and exactly what I predicted just happened. You need to go there and see it. Wait. I thought I told you to subscribe. What's happening? You've not subscribed yet. Go back there and hit that subscribe button now before we start another video. Go there and hit it now if you don't want to miss another amazing setup. We have an amazing setup on USGPY. Of course, we're going to analyze it together. So let's see how our gold played out. I really miss you guys. I came to show you our gold trade. Let's dive into the charts. What is happening? This is our good charts and this is the weekly time frame. So remember previously, was it last 2 or 3 days ago, we gave a good prediction on lower time frame. Actually speculation though. We gave this speculation on lower time frame. We had this setup then. We had a very sweet and amazing setup. So if you go back to a previous video, you're gonna be seeing when we drew this setup last time. We had this level pretty clear, right? We had this level good. Good was at 1876. So we predicted that it is going to go to here. We told you that we are bullish. We are at 70% bullish on gold. Look what happened, guys. We said after this level is tested, it's going to go to this level. And again, our next level target is going to be $2,000. So gold did exactly what we said. After hitting this level, it broke it and moved exactly to this zone. Yes, if you took that signal, I know by now you should be in massive profit. I think you should have taken your profit by now. Yes. So that is how amazing our analysis is. So if you're looking around, if you're subscribing, if you're liking our video, if you're commenting, we're going to be doing more of this every week. Remember, you need to subscribe, you need to like, you need to comment. Let's get to 50 subscribers this week. I trust you can do it. We're just starting out. I trust you can do it, guys. So this week we're going to be looking at, today is Sunday anyway, the market is not open yet. We are looking for, at least in the next, I think in the next few hours, the market will be up and running smoothly for the week. So we are waiting for a break of this zone. First, we need a pullback and a new consolidation of this zone. Uh, 1920. We're looking for a good consolidation. Sorry about that. Of this level, then a break of this level, a retest, then we pull our trigger exactly how we did here. Exactly the same. So we're going to be looking at a more bullish rise on gold, provided this level is broken. But if it is not broken, then we are going to be going bearish a little while. A little bit. I'll be there to save the day. Superman got no. So guys, welcome back guys. Welcome back. Yeah, as you're saying, if this level got violated, we're going to be heading to this level, which is around $2,000 on gold. And then we'll be going down to lower time frame if possible. For here, I think we are seeing a little bit of rejection candles. We've seen a rejection candle, we're expecting this level. So we're going to be holding on until something big or amazing happens here. Then we'll enter and go bullish. We are still bullish on gold, guys. We are still bullish on gold. We don't change our biases until we see something, a bearish pressure that can make us change our bias. So, guys, for now, that is that for gold. Let's check on. Remember the last time we talked about going to analyze the Euro USD, but for now, Euro USD still a play. So we are not going to analyze Euro USD. Let's go to USD JPY. We are seeing something amazing on USD JPY. Remember, we're going to be going to the top, from the top, go to the bottom. This is the H1. We're going to go to the monthly time frame to view the whole market structure from the higher time frame perspective, guys. You have to be seeing everything clearly. You have to understand everything. As you all can see, just me looking at this chart, you already know what it's looking like. This is an inverse head and shoulder pattern on monthly time frame, telling us that the bulls are really in control of this market. But what happened? They have to come back and test the neckline. This is very clear. They must come back and test the neckline before going bullish. Even if they are violating this level, it must respect this level because it's been tested over time from December 2002 or something. It respected again here 27, expected again here 215, and here it's coming back to expect 223, right? So what is happening after the structure was formed? It was broken, created a neckline, and here marks our retest level, the touch of the neckline. So we go down to weekly time frame to see the charts more clearer. So here is our weekly time frame, and we've seen the move here. It came down, broke, came down from some little structure on daily time frame, right? And it's coming back to test this neckline. We are not really interested of this move now until we go down to our daily or H4. I think H4 will be better. So this is our H4 time frame. So here is our H4 time frame. Remember, this was the break of that neckline, and this was the move to the top, and this was the comeback, a pullback to the neckline. All of this move. So we had this bull structure. This was an impulsive move, a correction, an impulsive, a correction, an impulsive three times. This is a completion of a bullish cycle. This is a completion of a bullish cycle. One, two, and three. In your Elliott wave analysis, you should always remember that the third impulsive move gives room for a bigger correction. That is the bigger correction. This is what's happening here. And the bigger correction is also giving us the opportunity to get along with the neckline of the bigger structure. You see how sweet these analyses are when you know your technicals. So now, what are we going to be doing? If you are scalping or day trading this market, we should be looking for short opportunities. Remember, on a bigger time frame, we're still bullish on USD JPY. But for this short-term sake, this market is still strongly bearish, like it's going to pull down to the neckline before we know what exactly we are going to be looking at. If you guess the neckline, it's going to react. It's either it breaks and will continue going down, or it respects the neckline and will pull up, pull up, pull up, pull up, and pull up. So for the meantime, we're going to be looking at a bearish opportunity, and that bearish opportunity is going to be presenting itself on the H1 time frame. After the last impulsive move, what happened? Markets broke this level. Remember where we marked our bad. It means if markets get to this level, we are no longer buying this market. We are going to be selling until we get to the neckline. That is exactly what is happening now. We sold here, we sold here, and now it's broken the recent last support that is holding this market from pulling up, right? It didn't validate the double bottom, so it's going down to test our neckline. Every other opportunity we are looking for now in a lower time frame, in the lower time frame, is going to be a sell opportunity, right? So that is how juicy this market is looking. I was in this trade, though I was stopped out a little while when this market pulled back a little bit and went back to my entry. I was stopped out at break even. Not actually, I got I squeezed out a little bit of profit before the market moved straight down to our TP. And the same thing happened, moved and collected our orders and moved down, right? So we are in this uh, level looking for a little pullback to this zone. This is our danger zone for now. A little pullback to this zone is going to be presenting us a very sweet opportunity to go short. A very sweet opportunity to go short. So all our expectation is for this market to pull back again to this level. And mind you, if you pull up our Fibonacci level, pull up our Fibonacci level from top of this move to this level, we are going to be seeing a strong 0.61% Fibonacci ratio or 51 ratio, sorry, 0.61 ratio at that particular level. It's either at the 0.61 or 0.5 Fibonacci level. Those are the most uh, reliable levels I'll be looking at. So even if the market don't pull back and it goes back to this area, we are still going to look for an entry around this zone. If the pullback of this correction is going to be weak, but when it is strong, we know that it's already respecting. Remember, our neckline is around there. When the next move after touching here is very strong and swift, then we know that we are going bullish again. But we are not going to buy anytime soon unless somewhere around this level is already taken out. That is the only time we're going to go bullish again. Remember, we know that the market is likely going bullish, but for now, we are not going to go. We still expect the market structure, which is bearish. Welcome back, guys. So, going by the H1 time frame, and make sure you're drawing the structure on your charts because this move is going to be massive. Like I told you, we've done our analysis and we are really sure 60-70%. Any pullback to these levels is going to present us an opportunity. If you use candlestick reaction, if you use candlestick manipulation, if you use candlestick formation, you have to check your candlestick formation around here. If you see a rejection candle or if you see any structure of the candlestick suggesting that there's going to be a bearish uh, movement, then you pull a trigger and sell out to this zone, right? You pull a trigger and sell out to this zone. So let's bring out our bearish setup structure. So here we are selling this market from there to this level. Remember, the higher time frame is bullish in our monthly time frame, weekly time frame bullish, but coming back to respect the neckline. But from the daily and H4, it is bearish because it's broken the last impulsive move of the Elliott wave. So it's going down, correcting itself a little while. When it breaks here, the correction turns into an impulsive move. If it doesn't break here, then we are still bullish on USD JPY. But for the short-term buyers, we are looking for price to enter into the danger zone, which is around 131.000. This is a major psychological level, or 130.76. Those are the levels around this area. So when price pulls back to that zone, we are going to be selling down with our Fibonacci level all onto this area, which is 126.00, another psychological level, confirming the retest of the neckline. This is our structure for the week. We need you to go back and do your own backtesting, do your own retexting, and do your own analysis, do your own chart breakdown. If you find the same bias on your charts using your strategy, then you know that it is around 80 to 90% possible that this market is going to move in our direction. Even if it is not your bias at the moment, you still lock in until price gets to this area and react. All right. So this is what we have for you for this week on USD JPY. Our gold moved swiftly as we predicted, and this is us the second analysis we're going to be making. We are making this year, I think. Yeah, we are going to make another analysis, I think, by the middle of this week, which is USD, Euro USD, and it's going to be thunder. Like seriously, go guys, go and fund. Like go and fund. I'm very serious about it. Go and fund. Euro USD is cooking up a very strong thing. Like is very strong, it's massive, and it pulls out seriously, you are going to make a lot of money. If you have any pro firm accounts, you want to pass your 10k 10% or 8% challenge, wait for USD JPY, it's going to be massive. Then if you want to catch that move, make sure you subscribe, right? Then your notification bell, turn it on so I'll be notified when that video drops. We're going to make the analysis before the move, like we always do, right? So get ready, guys. Get ready and